Yeah.
See
Oh,
people joining there. Hi
yeah.
guys, welcome, welcome, welcome.
That happened fast.
Yeah,
As soon as I click the start button, it's like 30, 40 people just dropping right in.
that's it. It's
I
good to
guess
see people in here.
that's how it works. I'm looking to see if I recognize some of these names. I do recognize a few of them. Cool.
Yeah, and we'll get started in a second, guys. We're just kind of letting people come into the room and we'll let it fill up a little bit here. And I'm sure some of you guys have been on these before, maybe some of you haven't. So
I'm going to open up the Q&A box so I can see the questions as they come in.
great.
There we go. And I think everybody knows this is basically a frequently asked question or just an open forum to ask questions, and we can address stuff.
Yeah.
That is disabled from Sam. There's actually a Q&A box. It's not the chat box, I don't think, that you're going to use. You're going to use the Q&A box. There's another button somewhere along the bottom of the
So
Zoom.
Sam, the same box that you actually type that message in, that's where people are going to be typing questions. So
All right, you got it. Thanks, Sam. I'll just delete that. So Nate, no volume. Rick, if there's no
yeah,
volume.
there's volume on my end. Guys, raise your hand or just raise your hand if you can hear us, please. Just hit the raise hand button.
Yeah, cool. Thank you. Okay. I'm sure Rick will figure it out. Okay, cool.
All right, I got some questions coming in, and it looks like it's slowing down a little bit here.
Okay.
Audio 5x5, thank you. All right, well, let's kind of kick it off real quick, Marco. We've got quite a few people in the room already, and some of you guys may be new, some of you guys may be coming back. Marco and I like to do these webinars about once every 2 weeks or so. I think it's great to interact with our potential clients and our current clients as well. So typically on these calls, we do open up at the end, to a Q&A and a forum. We've got some questions coming in right now, which is great. We'll address those here in a little bit. But typically on these calls, we talk about kind of the background of Norada, the businesses in Norada Capital, what is a promissory note? Because some of you guys may be brand new to promissory note investing or accredited investing. So we'll talk about that. And just to backtrack a second here, I want to say hello again. My name is Nate Hall. I've worked with Marco for, 3 years now. I've helped him on the real estate side, but helped him on the Norada Capital side here. My background is really real estate. I've been in real estate for over a decade and helped people buy thousands of pieces of real estate. And I've at this point in my career as well, I'm supporting Marco in raising capital for Norada Capital. All right, so it's a good opportunity. I'll kick it over to Marco here in a second to introduce himself, but he's obviously been a mentor. Marco's an entrepreneur. Many of you guys know him as the real estate guy, which is great. He has a very successful real estate podcast. However, he also does quite a bit more, as you know, and you'll find out here through Norada Capital. So, Marco, do you want to introduce yourself for those of you who may or may not know you?
Yeah, for sure. So I think a lot of people do know who I am, but my name is obviously Marco Santarelli. I started Norada Real Estate Investments about 20 years ago when I started investing in real estate full time, and people were coming to me all the time saying, hey, can you mentor me or coach me? And the short answer was, I'd love to, but I can't. I just don't have the time, which was the truth. But I saw a lot of deal flow and I wasn't buying every property that I looked at or underwrote. So I was essentially just handing them off. And then I got a light bulb moment to create a business around it where I would do part of the due diligence, find the markets, find the deals, and then make those opportunities available to other investors. And that's when Norada Real Estate Investments was created. So I was basically finding deals for other people because I wasn't buying all the deals myself. And I just turned that business into a brokerage, and that is essentially that model. But over the years, I was investing in promissory notes and also creating promissory note opportunities, project specific. Some of them were oil and gas related, some of them were real estate related. And then I went full time on note investing, offering note investments to other investors in 2015. That was specifically real estate based. And then for 3 straight years, nonstop, day to day, we just had millions of dollars of revolving capital from private individuals investing in notes, where we took that capital and acquired distressed real estate assets, usually single family homes, sometimes duplexes. And we were basically buying those properties with that capital, fixing them up, and then flipping them. Some of them we kept for ourselves. But the reason I started doing that is because with our real estate business, Norada Real Estate Investments, we needed more inventory, and we weren't getting enough of that inventory from the providers we were working with at that time, the builders and the property providers. So I just decided, hey, why not start another business and be a provider to one of my other businesses? And so we started doing that in Missouri, where we were acquiring and renovating properties to create the turnkey inventory that we were selling to our investor clients on the real estate side. And that, unfortunately, I know this is not necessarily about who I am, but it provides a little bit of history and context to how we got to where we are today. That started to die off in 2018, where competition went up, profit margins went down, inventory was just getting harder to find. And honestly, the buying, fixing, and flipping business is a lot of brain damage. It's a lot of work. People seem to think it's investing. It's not investing. You're creating a job or a business for yourself. It can be profitable. But at the end of the day, I got tired of it, and it wasn't fun anymore, and it wasn't profitable. So I wound that down. Fortunately, around the same time, through people that I knew, I started venturing out into investing in other opportunities. At the time, it was e-commerce. That's what brought us to where we are today. Started going down the road of investing in e-commerce based businesses, opportunities, and that morphed into other areas, which are essentially, 5 categories within Norada Capital today, being e-commerce, educational masterminds, the Broadway productions, the Broadway musicals, and then to a much lesser degree, very small portions of real estate and crypto, just as a very minor asset class within that. But to make, again, a long story real short, that's kind of the history of how we got to where we are today, but also what I was doing 20 years ago when I got into real estate full time, started Norada Real Estate Investments. That's been kind of the thing I've been focused on pretty much my whole life, just investment real estate and real estate sales. And so anyway, that's where we are today.
And you bring up a good point, Marco. A lot of people ask often, how long have you been doing this? Well, Marco's been in the investment world and the real estate world for 2 decades. The brokerage has been around for 2 decades. He's been doing promissory notes for a decade. So this is not his, not a capital management, in my mind, as someone who's been here for quite a while, is a product of all those years of experience, right? And, I've actually never asked this on one of these webinars, Marco. You started in the e-commerce space. How many businesses do you think you started with to where we're at today? Like, how many companies underneath Norada Capital Management do we have?
There's about 27 what I call entities and ventures. So most of them are businesses. Some of them are just assets.
Yeah.
But there's about 27, and the biggest ones are the mastermind businesses. So Money Is, Think Realty, and Power Room, and to a lesser degree, to what we call tax-free crypto. It's actually not a mastermind, but those make up the largest portion of Norada Capital. If you look at it from a pie chart perspective, or just assets under management, to a much lesser degree, it would be the e-commerce investments, and then to a slightly lesser degree would be the Broadway musicals and Broadway productions that we were working on right now and have been working on for over a year.
Yeah, and there's obviously some land development and some real estate as well. So there's multiple businesses or entities underneath Norada Capital Management. So as we talk about the actual note investment, the promise note itself, that's what backs the note. So one of the questions we get, and again, some people might be high level on here, some people might be brand new to promissory note investing. So can you break down for us what a promissory note is and how that pertains to Norada Capital?
Yeah, and then one of the questions we can ask here shortly as well is Ben's question there. Where do we invest the money? I partially answered that question already. What is a promissory note for? I mean, this is notes 101 for, so
Yeah.
for those people who are familiar with that, I'm just going to cover it very quickly. So just bear with me. But essentially, a promissory note is nothing more than a loan agreement. There's two parties to it. There's a borrower and a lender. Promissory notes are used everywhere, every day, all the time. It's just a standard a document. It's no different than a loan agreement. In fact, it is a loan agreement. It's just a loan agreement is typically a document that has a lot more pages and language to it. A promissory note is just a smaller version of that. But a promissory note just lays out the terms of that loan. When does it start? When does it end? What is the interest rate? When are those payments or distributions made? Is it a balloon payment on the end? Is it amortized? Is it not amortized? That's all it states. And of course, it names the parties, the borrower and the lender. In our particular case, the investor is the lender. Norada Capital Management is the borrower, and out in the real world, quote unquote, these are referred to as corporate notes, corporate bonds, corporate loans, whatever it may be. But the document title is called a promissory note, and that's the long and the short of it. It's nothing that complicated. It's an instrument that's used every day. If you've ever signed a car loan, a student loan, a bike loan, any kind of a signature loan at a bank, those are all promissory notes. So you should all be familiar with what a promissory note is. Did I miss anything on that, Nate?
Yeah, I would say, and to Ben's question there, like, where do we invest the money? That comes up all the time with us. Or what's the capital being used for? And so to put it in context of our backgrounds, if we have some real estate people on the call, if you've ever been a private money lender, right? Private money lender to a real estate transaction or a real estate deal. Here, it's the same concept. You're being a private money lender to Norada Capital Management, and then that capital is being used to grow and expand the current holdings that Marco has, and potentially any new offerings and new deals that come to the table, right? So if you want to talk on that, Marco, or expand on that, you certainly can.
Yeah, no, I think you hit it, and we can expand on that as we go here, because I'm just looking at some of the questions. So we can expand on that. Do you want me to go through the questions? Do you want to pick some or?
Yeah, well, let's do this. We're gonna stop a little bit early just on the explanation. I think a lot of people who are on this call have heard the explanation. You can look at the investor slide deck. The offering is quite self-explanatory, right? If you haven't gotten a copy of the investor slide deck, you can certainly email into our info email address, info@Norada Capital, and we can send that to you. But yeah, I think it would be good to kind of just open this up as a Q&A, Marco. We obviously are doing a promotional interest rate for the rest of August. Maybe we talk on that first real quick and then jump into the questions if that works.
Yeah, that's a great segue. So I think a lot of the people, a lot of the attendees on today's webinar are possibly here because we're running a short-term promotion right now with a 2% bonus interest on the notes. Now, this is for a limited time. As it stands right now, it's till the end of the month, end of August. It's an additional 2% to the interest payments or note structure that we have. So the way our promissory notes work are this way. Any investment up to $100,000 is 12% per year fixed rate with monthly distributions, monthly payments. Anybody who invests $100,000 and above is at a 15% per year rate of interest on that promissory note. And again, it's monthly distributions. It's just Wells Fargo Direct Pay. We set you up on there. You get a deposit into your account, your self-directed retirement account, whatever account you're using, as long as it's a US account or US based account. And so for this period of time till the end of the month, we are adding an extra 2%. So it's either the 12% goes to 14% or the 15% goes to 17%. So your note will earn either 14% or 17% per year for the term you choose. And I forgot to mention that before. You can choose a term of 3 to, correct me if I'm wrong on this, Nate, from
7.
3 to 7. The amortized note has a 10-year option, but the interest only notes, which are pretty much almost all of them, range from 3 to 7 years. So so you get that additional 2% bonus for the length of that term. Now, if you are an existing note holder right now and you're on this webinar and you want to add, because we have a lot of people who are always saying, hey, I've got some extra capital I would like to add to my note. Can we add to it? Yes, you can. What essentially do is we just reissue a brand new note, just start the term over again. And with that additional capital, we can set you up on that 14 or 17% interest instead of the 12 or 15. So it's just very simple. We're just issuing you a new note, paying off the first note and replacing it with the new note. Did I miss anything, Nate?
Nope, that's correct. That's
Okay.
correct. Yeah.
Okay, so that's how the interest works or is earned on the notes. And it's pretty simple to set up. You just fill out the profile form on our website. You can talk to Nate or whoever your investment counselor is, and our system will automatically send you a DocuSign to review and sign, and then it is sent over to me to review and sign as well. Maybe we
Correct.
can segue to what's Ben's and Scott's question now.
Yeah, we'll segue into some questions, guys, because we've got a lot of you on this webinar, and I'm sure you guys want to hear some answers. So,
Yep.
yeah, if you want to start, if you want to go through the Marco, and then I can add to your answers if I hear anything. We can start with
All right.
Louis' question we just answered. So
Okay. All right. Yeah. If you see one that's answered, you could just take it off. So
Yeah.
Ben asked, where do you invest the money? So that's a good question. It's really the 5 categories that I just talked about a minute ago. 3 of them are the main ones. So the biggest one right now, and the one that we're hyper focused on, is what we refer to as educational masterminds. Sorry, I got to clear my throat. I just had something in my throat from drinking this coffee. So this could be a whole webinar in and of itself, but some of the businesses that we have been growing rapidly and that are expanding fast are what we refer to as educational masterminds. There are 2 main ones. There's one we call the Money Is Mastermind, and there's an educational mastermind called Think Realty. Those 2 masterminds are I don't want to say events. They are content rich educational forums where people who subscribe to those masterminds get a coach, they get weekly content, monthly content, they have live events they can attend during the year. There's a ton of content and ton of value. There's community, there's a lot going on there. So the value compared to the cost for these people are 10x, 50x what they come in with. But it's information and educational material that they don't get anywhere else in school or other places. And so the way we bring these people into these masterminds is through a monthly event we put on called Aspire. We have an event called the Aspire Tour. And you can go to the website aspiretour.com if you want to check it out. But ultimately, every month we have anywhere from 2,000, 2,500 people or more that attend these events in a different city. We just finished doing one at the Javits Center in New York City last week, and we had about 2,200 people there, and they're growing. At these events, we have speakers like Barbara Corcoran, Kevin O'Leary, Mr. Wonderful from Shark Tank, Marcus Lemonis from The Profit on CNBC. We had A-Rod there, Alex Rodriguez. So we have all kinds of incredible people to speak and educate you on everything from mindset and personal development all the way through financial education, money movement, making money, growing your money, protecting your money. That is what we call the top of the funnel. People come into these events, they get a ton of value and a ton of education. From those events, they can choose to move through the pipeline, if you will, to what we put on as master classes. They're typically 2 or 3 day master classes, as well as access to our masterminds, which are typically $12,000 or $15,000, sometimes 17. We have various upsells and packages, but on average, it's a $15,000 annual subscription. And so we have hundreds and hundreds of people that are coming through these programs. That's the revenue model. But we're growing these businesses. They are a heavy lift, and they are a little bit resource intensive on the front end, incredibly profitable on the back end, but on the front end, they're resource intensive. So I like to think of it as a rocket ship that we are launching into orbit. Once it's in orbit, it's not only a highly profitable business, but it's self-sustaining. And so that is where we are focused right now in terms of our investment capital. We are growing and scaling those existing businesses. We're not doing anything more at the moment in terms of the e-commerce businesses that we've made investments in. We're doing a little in terms of increasing the Broadway productions that we co-produce in New York. as part of our portfolio. So most of that is done. I am still looking at and underwriting various offerings there with the lead producers and partners that I work with in New York. But the majority of the capital is still going towards the mastermind businesses that we, are growing and scaling at the moment. I think you removed Ben's question, right, Scott? Or
Well, I did. I also typed in an answer. I put in the aspiretour.com link
Oh,
for
okay.
and for the other people can see. So moving on to Scott. Scott, we basically just answered that same question, right? We just talked about what other than, and I think other than real estate, sometimes people get confused. Scott asked, what other than real estate are you currently invested in? You might be thinking of Norada Real Estate. It's a completely separate entity. That's our real estate brokerage that helps investors buy, hundreds of doors a year, but completely separate.
Real estate is really not something we're focused on, just so you know,
Yeah.
as far as Norada Capital goes, because real estate in general as an asset class right now does not produce the types of returns on a cash on cash basis that businesses produce, especially the businesses and ventures that we're invested in through Norada Capital. So I'm not saying real estate is a bad investment. It's not. It's a great investment. It's fantastic. It's why we have Norada Real Estate Investments. So long-term, incredible wealth preserver and wealth creator, and in time, a good cash flow generator. But today, the cap rates are not there, and therefore the cash on cash returns are not there in order to achieve the rates of return that we need as a private equity firm, which is Norada Capital. So it's not that we don't like real estate. We love real estate. It's just not what we focus on through Norada Capital Management. But on the Norada Real Estate Investment side, if you're looking to invest in turnkey residential real estate, 1 unit, 2 unit, 4 unit properties, we have access to all that inventory in different markets around the country. So you can certainly contact our team about that. But to Scott's question, yeah, we're not focused on real estate because it doesn't generate the immediate numbers we need today for that.
Moving on there, Marco, do you want to move on to the next one there?
Yeah, in no particular order. In some of your literature states that there are 2-year notes available. Is still true or no longer available? Yes is the short answer. Originally, we structured the 2-year note. I don't know if it was a limited time thing. It really wasn't. We can, I guess, I'll just say this. We can do a 2-year note if that's really what you want. We only market and advertise 3-year notes and above. But for a period of time, we were offering a 2-year note as an option. We don't really market that or advertise it or talk about it anymore. But if you still have literature or information about that, we can certainly honor a 2-year note for you.
Okay,
the only thing I will say about that, just as a caveat, that 5% bonus interest, which applies to notes, and I didn't mention this before, Nate, investors that have a $200,000 investment, like a $200,000 note or above, qualify to receive a 5% interest bonus on the maturity date of the note. So when the note matures, you get your principal's return. There's an extra 5% added to that. It's like a pot sweetener. Think of it as an incentive to have a larger dollar amount invested in a note. That applies to notes that are 3 years and above. So if you have a 2-year note and you have a $200,000 note or above, what we would do is prorate that 5%. So essentially you're getting 2/3 of it on the maturity date, because we only set that up, that 5% bonus, to be applicable to 3-year notes and above. And that's really the only difference. It's just we would prorate that, so you're receiving 66% of that 5%, 2/3 of it after the 2 years.
Right.
Yeah.
All right. Moving on there, Marco, whichever one you want to choose there.
Yeah, let's do Jason's here. Why the 2% increase? Are investors harder to find or more opportunities? No. The reason we chose to do a 2% bonus towards the latter half of August, basically to close out the month, is because summers are always slower in terms of capital raising. School's out, families are on vacation, people are just not thinking about their career or their finances as much in the summer. So things tend to slow down. Lead generation drops, interest drops. It's not that it's not there, interest drops. People tend to take longer to make decisions or just postpone things until September. And so, we have obviously we have weekly targets and monthly targets, as a company in our capital raising efforts. And so, in order to just kind of stimulate activity and interest for the month of August, so we can close the month strong, we just decided to try. I mean, everything's a test, but to test this this promotion or this incentive, and it's been doing well. So that's the reason for the 2% bonus in August.
Perfect.
Okay. Anything to add to that? No.
No, I think you hit the nail on the head, right? It does tend to get a little bit slower in August or in the summertime, and it was a great option. It's been doing quite well. So
yeah. I'm just kind of picking it randomly because as I'm talking, I can't read the questions. So
sure.
Roger, can a promissory note be given to an LLC as a borrower to buy short-term rental real estate? I'm not sure I understand that. Can a promissory note be given to an LLC? Does that assume that we're lending the capital?
Correct. Yeah. So Roger, we're not actually lending capital here. You are the one lending capital to us in this case. So yeah, we wouldn't be creating the promissory note and then lending to an LLC. Now an LLC can certainly be a lender, right? We have plenty of clients who utilize LLCs or their businesses as on the promise note contract, right? They might use their EIN number in their LLC to create the note, and then they might lend from their business. But in this case, no, that wouldn't be how we would operate.
So there's a couple of questions here from different people that are similar in terms of whether it's a first lien position, second lien position. That one's from John. There's another one from Richards, about what secures the notes. These are all similar questions. So I'm going to answer that one to cover all those questions.
Okay.
So I didn't mention it before, but there's two basic types of notes. There's a secured and unsecured note. A secured note is much like what you would have with a mortgage loan. Okay, so call it a promissory note or a loan agreement, but there's another document that rides along with that loan agreement that attaches that loan to a piece of collateral. And when it comes to a mortgage loan, that loan is attached to your property. The property becomes collateral. So if you're in default after 3 months or 6 months, just depending on the state you're in and whether it's judicial, non-judicial, the lender can basically foreclose on the property and take the property as collateral and sell it or do whatever they want with it. So that's a collateralized loan. It's a secured loan. Real estate loans are typically secured or collateralized that way. But there's also unsecured unsecured notes that don't have a piece of collateral directly attached. It doesn't mean that there is no collateral. There is, but it's not attached to any particular asset. And that's true with unsecured notes. Now, in our case, we have unsecured notes because your note is not attached to any one specific asset or business or brand that we have in our portfolio. So that can sound like a disadvantage, but it depends on how you look at it. It actually is an advantage. I've had this conversation with many sophisticated investors in the last 3 years. When you have a portfolio of businesses and assets, your unsecured note really sits on that foundation of those assets. So you benefit from the growth, however slow or fast they may be, of each and every one of those businesses. And so the benefit to you is that you have that, what I'll call diversification, the diversification of having that note benefiting from the growth of each of the businesses and ventures and assets in the fund, what you might refer to as assets under management. So even though it's not attached to one specific business or asset, you benefit from everything within the portfolio. So think of it as the foundation below or behind backing that note. So that's the long answer. The short answer is, again, technically it's not a secure note because it's not attached to anything. It can't be attached. We can't do it that way, but you benefit from everything that is there, the growth, if you will, of everything that we're invested in.
Yeah, and to add to that, Marco, in terms of, to me as an investor, in terms of risk, right? I would rather have it benefit from multiple businesses as opposed to having a note attached to one project. let's be completely realistic. Businesses, sometimes cash flow positions can change. Some musicals might do better than others, right? So if we decided to attach a note to the outcome of one specific, let's say Broadway musical productions, and that production didn't do as well, then to me that holds a little bit more risk, right? As opposed to having the note held underneath Norada Capital Management, which has multiple businesses. So
Right. Okay, so I was just going back to the questions to read some.
yeah, and guys, we've got a lot of questions here, so I just want to note,
Yeah.
if we don't get to your question, we slated an hour for today, but we'll make note of these questions, and we can certainly get to them via email. You can set up phone calls with us. We've sent you several links and emails in the past to set up phone calls with us as investment counselors. So we'll get to as many as we can. All right.
Tim has a quick one here. Is the 2% extra just for the month of August or for the life of the loan? It's for the life of the loan. Like if you invest in a note this month, whatever you lock in at as a rate is tied to that note for the life of the loan, for the life of that note. So it's ongoing. What about the bonus for investments of over 200,000? Same thing applies. Is 2% is attached to whatever rate at that tier. So there's only two tiers, 12%, which is up to 100,000. 100,000 and above is at 15%. You add the 2% bonus to that. That was from Roy. Do you have an investor dashboard that shows our investments? That's someone else has asked me that question. We don't, because it's such a simplistic investment. Like, it's a fixed rate of return. You know exactly what the monthly interest payment is going to be, which is just automatically deposited through ACH, just direct deposit into your bank account. So you'll just see that in your own statements, online and offline. There's really not much to show in a dashboard. One thing we have been talking about is coming up with a quarterly newsletter, which is not the same as a dashboard, but a quarterly newsletter, just give you an update on the different sections and investments that we have, and what we're working on. So that's something that I intend to do. But that was Kai's question, I think. Yeah. Okay. How long have you been operating your current business model? So I got involved in promissory notes back in 2012. So that was project specific, was on and off. It wasn't continually every month, for years back to back. But it was 2015 that we went full-time, like just as a daily, weekly, monthly business model, where we were raising capital from promissory notes. And back then it was all real estate based. We didn't venture out into e-commerce or anything like that. But that was for 3 straight years. And it was towards the end of that 3 years that we started to venture away from real estate and into, at the time, e-commerce businesses, e-commerce ventures. And so, but it's been full-time and ongoing ever since then. So I guess you could say 2015 is when we opened this up as a full-time business model. And then, like I said, we moved away from real estate and ventured out into other, what I call more profitable business ventures, which we can't produce with real estate today. So that was from Christopher. I'll clear that one. Let's see. Rudy, do you have to be an accredited investor to invest in? What is the minimum amount to invest? Okay, so yes, you do need to be an accredited investor. We have had investors in the past that are non-accredited, that we pick and choose who we do business with. As a non-accredited investor, we're going to obviously have a conversation with you and ask you some questions and just see your level of sophistication if you're non-accredited. The other thing to be aware of with that is you cannot have a note that is longer than a 9-month term. It's just kind of a weird rule, but it has to be a 9-month or less note, and that's it. I mean, your note will be paid off and satisfied after 9 months. That's just not our rule. That's just an SEC guideline. They don't consider a 9-month note as a security, anything less than a 9-month note. The minimum amount, I think I talked about this already, what we market and advertise is 50,000. We try and stick to that. We did for a short period of time have a $25,000 minimum, but generally speaking, 50,000 is our published minimum for a note. If you want to have a conversation with Nate or one of the investment counselors about that, we can expand upon that and go a little more in depth. But again, our published amount is 50,000 as far as the minimum.
Yep.
Tom, I think you just answered my last question. Okay. So you answered my question. Lorenzo, so you answered my question. You need 100,000 plus, correct? No, the minimum is 50,000, as I said. But again, there's two tiers, like up to 100,000 is 12%. And for the month of August, the rest of August, it's an extra 2% on top of that. 100,000 and above is 15%. And then there's a 2% bonus during the month of August till the end of the month. Okay. Nate, let me know if you see anything that pops out here. I'm just kind of reading these. The investment limit. Yeah, a lot of the accredited investor questions are popping up. Philip, is the investment limited to accredited investors? I answered that. So here's a long one. Don't know who this is, just says user. How do you see your businesses weathering the storm of the absurdly unsupported economy we find ourselves in? Is this funding tranche intended to be working capital to carry the existing businesses through the deflating or crashing economy? Well, interesting question. This is probably goes down a couple different rabbit holes. You can ask 10 different economists what they feel about the economy, and you'll probably get 10 different answers. The economy is still running strong. The housing market has gone through a period of deflation, market specific, of course, but we've seen some rough roads when it comes to real estate in the housing market. But the economy in general has been chugging along. The Fed, doing whatever the Fed does, has been trying to obviously stimulate the economy, but at the same time, lowering consumer demand to curb inflation. And I think they've done a pretty good job in terms of lowering the CPI. So, they keep talking about this soft landing. I think we're kind of there. I think we're at a point where they're walking a very fine line of keeping the economy humming, not crashing the economy, keeping business stimulated, credit on the tight side. They know that they're affecting the housing market, which is not necessarily a bad thing, just because demand is so strong and there's a lack of supply. I think there's going to be a period of normalization here. But I wouldn't say that the economy is unsupported. I think things are going along reasonably well, considering what we've been through, especially with COVID and all the quantitative easing and money printing that's been going on. I don't have a crystal ball. I do see 2024 being a very strong year, economically speaking. I don't see a market crash. Could there be mild recessions? Sure, we see them all the time. We weather through them, and that's not much of a problem.
Yeah, we're currently in one. I mean, to me, we're already kind of in a recession, right? So.
Yeah, and and what's the impact on e-commerce businesses? Well, we saw that during COVID. E-commerce just survived and thrived, during COVID, because people were staying home, or they had to stay home. They couldn't go out shopping at brick and mortar stores, and so e-commerce just exploded. The one thing that we did feel a pinch on, though, were the Broadway musicals during COVID. During that period of time, it was just hard for people to get out and buy tickets, because they couldn't go to a show. Everything was closed. I mean, virtually speaking, everything was closed. But we're 80 to 90% back to where we were in 2019, pre-COVID levels there. So things are coming along. But again, this is a huge question, and it's making some assumptions. I don't think we have a lot to worry about economically speaking. We're always going to have trials and tribulations and mild recessions along the way, but I think we're going to weather through everything just fine. So anyway, I'll just leave it at that, and we can certainly get into the weeds more if you want. Nate, I'm going to have you questions as well, because while I'm talking, it's better.
Yeah, I can chime in if you want me to just kind of go through some of these here, top to bottom. It might be easier that way. You're not doing both. So let me see what Alex said here with new note. With the new note being between the investor and Neurontic Capital, do you provide any financial information to the investor for Neurontic Capital prior to investing, for example, recent financials or for Neurontic Capital? It's a good question.
I was actually looking up the answer to another question while you were doing that. So which question was that?
It's at the very top. So essentially,
Oh.
the question is: does Neurontic Capital provide currently any company financials prior to making the investment with Neurontic Capital?
Right now, we have a balance sheet that we release to investors that want, that kind of information. Some investors don't need it, don't ask for it, and I don't know, maybe don't care. We are working on a cash flow statement for Q4. So that will be coming out, and then in the new year, we'll be releasing the P&L, the income statement. So
Yeah.
we're doing those in quarterly phases.
All right, I'll keep asking here for you, Marco.
Yeah, that'd be great.
Yeah, I want to keep going. So Tom asked, what's the current loan to value ratio? How high will you allow it to become with the latest process? I guess in my mind, the question is more like, what's our current debt to equity value? I mean, loan to value is more real estate based, right?
Yeah. So currently on the books, we've got assets that are going to be close to, I think it was the last time I looked, 123 million.
Yeah.
The capital stack on that is roughly around 40 million. So, you could do the math on that ratio, 40 versus, we'll call it 130 million. So, in real estate terms, you refer to that as a loan to value, LTV. That's going to be somewhere in the 35% range.
Okay. Somebody's asking here, how are they secured? We've talked about that. So Cynthia, we've talked about the secured piece. If I'm Canadian, how can I recover from this client's Canadian? How can I recover from the loss? She asked, what happens if there's a default, right? And I think in that case, we're asking what happens when there's risk. Well, there's obviously risk in any investment, whether it's private money lending, putting money in the stock market, right? We can certainly send you guys a sample promissory note, like a contract, and that does talk about default. It's page 2, section 6 that talks about that. We're happy to send that to you. Marco, if you want to talk to that risk question, you certainly can.
How do we mitigate risk?
Yeah, how do we mitigate risk? She said, what happens on a default, right? That's a question about risk.
Yeah. Yeah. Well, I mean, let's just start off by saying that since 2012, which was what I was talking about before, we've never had a default on a note. Investors have always been paid. Only when we were doing real estate where there are some, like maybe 5 or 10 notes over the course of 3 years where investors were paid late, not on the interest payments, but on the note itself. And that's because it was tied to real estate. It was a secured note tied to one piece of real estate, a piece of collateral. And so we couldn't liquidate, the capital from that property until it was actually sold. That's what fixing and flipping properties is all about. So, but those investors were ultimately paid, but there's never been a default, which is great. We do reserve the right, and this is in the promissory note documentation, that if there is a default, I mean, it outlines, how interest is accrued, when the note is accelerated, all that kind of stuff. It's all the language is in the note, but we do also have the option, if you will, the right to issue shares or equity in the company that's equal to or greater than the amount owed on the note if there is a default. So you can end up owning equity in the company if it got to that. Do we want that to happen? No, we don't want to give up equity. Can we do that? Sure. We reserve the right to do that. But obviously we're going to do everything we can to avoid having to do that. So of
course, and that's worst case scenario, right?
Yeah.
All right, moving forward here. We talked about the initial investment amount already. We talked about that. Sorry, guys. Thanks for the patience. There's a lot of questions. So
Scott has another one here.
Yeah, it's a good question about you talk about the interest rate one.
Yeah, Scott just asked, how can you pay that much of an interest rate to your investors? I'll say 2 things about that. First of all, if you are an accredited investor and you have a good network of people, you're in the right circles, if you will see that there are opportunities that come along all the time that are paying, 15, 20, 25% rates of return, whether it be interest or distributions from cash flows or revenues or profits from businesses all the time. I mean, this is not uncommon, but this is especially common in the business world, which is kind of the second answer to that question. If you're comparing this to something like real estate or something that's less sexy, less desirable in a way, yeah, you're not going to see high rates of return like the distributions. But when you have profitable businesses that have high revenues or that are scalable, that have high profit margins, you will have the profits in order to make those distributions. So, paying 12% or 15%, like a preferred rate of return you might find on a real estate deal is doable. So that's basically the bottom line there, is that we are invested in business ventures that allow us to pay because of the margins that they can and will generate. So, that's kind of the short answer to the question without going into, the weeds of it and pulling out numbers, but yeah.
And something to remind investors as well to add to that, Marco, businesses, one of the first flips I ever did, right? I borrowed 12% in 2 points, right? So it's not in the world that I'm in the real estate world, hard money lending world, private money world, seeing higher rates of return isn't abnormal. Now, the business model of 12 to 15% is not going to be, it's not indefinite, right? Marco and his owners and his partners aren't saying, hey, we're going to raise money at 12 to 15% forever, right? But it's a nice interest rate to provide to clients who want a higher rate of cash on cash return for several years. But it's not indefinite, right? Businesses aren't going out there and just raising money at 12 to 15, for the foreseeable future.
Mm-hmm.
Yeah.
Right. Have you ever had to pause scheduled distributions, Christopher? No, never had to pause. Never skipped, never missed, and never paused.
Yeah.
Tom, if one were to extend an existing note for a period of time, could you get the bonus 2% on the existing note for the extra period? Yeah, I think I touched upon this earlier. If you have an existing note and you're adding to it, rewrite or reissue a new note. It'll pay off the original note. You'll have a new note to replace it. It'll just reset the clock on that. So you'll have a new term. But then we can attach that bonus 2%. That's basically the only situation where we'll do that. So,
I know we just answered that question, right?
Yeah, I recognize some of the names. Melanie, hi Melanie. If you add to an existing note, is there a minimum? I assume what she's asking, is there a minimum to add to the existing note? I was just talking to Kathy about this, our operations manager, and we were trying to decide whether the minimum add-on would be 25,000 or 50. I think we had different opinions. I think we want to go with the 50,000, but if you're adding 25, we can do that as well. Anyway, just Melanie, just get in touch with me or Kathy and let us know. But yeah, I mean, we kind of have to draw the line in the sand somewhere there. I think it was an email that went out, an internal email on that. Okay, I'm still reading here, but you can pick one too if you want, Matt or Nate. I'm reading.
I'll say, I can answer this one quickly. J.K. Richards, whose signature secures a note, that would be Marco, right? Marco's signature
Correct.
secures a note. Kai or KY, that's what your name is on this here. A little bit morbid. If my husband gets hit by a bus all of a sudden and I need my money back, can I find another lender to take over the note? At the end of the day, Kathy, here's the deal. I know Marco, if there's something that came up like that and and you needed the capital back or the promissory note back, I'm sure that could be worked out, right? Where the money could be returned to you in that sense.
Benjamin's asking a similar question to the one previously. I already have an amortized note. What is the minimum capital I need to add to renew the note at this new rate, ideally a 5-year note? Benjamin, again, like I said, I think we've been talking about 50K as a minimum add-on, but we'll probably just accept a $25,000 add-on to the note to reissue it. So hopefully that answers your question.
Yeah.
And I'm reading more here.
I like this one from Ruth. Marco, how do you decide your criteria, which entities and businesses are part of the Norada capital management portfolio? I think you've already talked on that. We look for higher yield, type businesses to create the, obviously the return so we can pay back our note holders, right?
Yeah.
Um,
Jason, what is the process to become an accredited investor? Can you do that in-house? For example, can I send you my 22 units? Here's a great thing to do. The self-serve quick way to do it is go to verifyinvestor.com.
Yeah.
It is just fill out a few forms. It'll take you less than 5 minutes, just answering some questions and uploading anywhere from one statement to a few statements. And they have a nationwide network of attorneys that will review it, and within 24 hours will respond to you. And if you just check the boxes, they'll send you an accreditation letter in your email as a PDF. It's fast, it's easy. The other way to do it is just to simply talk to your CPA, your tax advisor, your attorney, someone who's a professional that knows you or knows your financial situation and can validate that you are, by SEC definition, an accredited investor. So those are the two basic ways. Verify Investor is very easy. It's like, I think it's $49, so it's not even an expensive thing to do. So that's what
I'll type that in the chat for you, Jason, as well, so we can send that to you.
You can put that in the group. Just send it to everybody. Just put it in the group chat as a response.
Yeah.
Jack, how risky is the crypto asset? Well, the crypto portion is a very tiny percentage. I would say 3%, 3 or maybe not even 4%, but probably about 3% of our assets under management. So it's not, I wouldn't call it risky at all. It's just an inflation hedge. It's one of those high alpha moonshot type of assets or holdings. But I've been following crypto since 2017. I know quite a bit about it. I do know what is going on there, and it's high. Let's also keep something in mind. We're not talking about crypto junk. If you look at the top 10 crypto assets of everything out there, you really shouldn't be looking at anything outside of the top 10 or 20 assets. For me, just not financial advice, but the three that I like, personally speaking, are Bitcoin, Ethereum, and Solana. To me, if I had extra capital to put towards a very small holding of my portfolio towards any kind of crypto asset, it would be one of those three. Again, that's me personally. I just think they have a great future and a very high upside potential. But you have to have, when it comes to crypto assets, you have to have a minimum of a 4-year horizon when you look at that kind of stuff. So for me, I look at things like Bitcoin and say, where could this potentially be over the next 5 to 10 years? I'm not looking at it as in, what is it going to do in the next month or 3 months or 6 months? That's just too short of a time frame. But crypto assets, being Bitcoin, making up such a tiny percentage of our assets under management, if you will call it that. It's not really something you manage, but our assets really doesn't carry any risk for us. So Jack, it's a good question, but it's really not all that significant with what we're doing. Brant, go ahead.
I was going to answer the same one from Brent. Good question.
I'm just scrolling down.
We've talked about that, but yeah, we've never had a default, never had a missed payment for
Correct.
this option.
Yeah, that's what Brent was asking.
Yeah.
Was your track record for being on time with interest payments and return of capital? 100%. It's 100%. So, okay. Mike, would you consider allow shorter terms, need to access my cash sooner than 3 years? Didn't you just answer this, Nate?
Yeah, we both did. We talked about if there is an option, if you need like 2 years or something like that, we could honor that, right?
Yeah, Tim, will the recording of this be available for us to rewatch? Yes, everybody will get a link within the next day or so. Stephen will send that out with the recording of this webinar. So yeah, you'll have access to it. No problem there. Bamar, I'm not sure what the name is. Does the rate you pay change with the Fed rate? It's a good question. And I did say the word fixed early on in the beginning of the webinar. The interest rate is a fixed rate of return. It does not change. It's not variable. It doesn't fluctuate with the Fed's, funds rate or anything like that. If you're locked in at 12%, 15, or in this case, 14% and 17% for the month of August, you're locked in. It's a fixed rate of return. It's an annual rate of return. It doesn't change. Your monthly distributions are the same for the life of that note. Which, by the way, just worth emphasizing for, all the people still in attendance. We broke 200 people there. That 2% bonus promotion is for the month of August. So you need to have your note in place. And the way we've basically agreed to do this is that your funds need to be in wired or in transit by the end of the month. Could there be exceptions to that? Yeah, it depends on what you're doing. Like if you're actually transferring funds, through a rollover with an IRA or something, we could probably make an exception for you. But just keep in mind that, we need to draw the line in the sand somewhere here.
Yeah.
And
Marco, just coming back to it, we've got about 5 minutes left, guys.
Yeah.
Again, there's a lot of questions here. We can work to answer those or get those to you answered via email or, from a phone call, certainly. So go ahead, Marco.
Oh, you weren't interrupting me.
Okay.
Jeffrey had a crypto related question as well. How are your cryptocurrency investments, and will you be investing new money into it? There's no plan to invest any more into it. We've got a good position, a good holding there. And again, like I said, it only makes up about 3% of our assets under management. So it's really not something we plan to expand on at this point in time. If it takes a good dip, then it might be worth picking up more at what we'll consider a discount, because if it's well below, it's 21-day moving average. It's, if it pops below into areas where it's clearly undervalued, then it might be worth picking up a little bit more, but it's not something that we have, in the middle of our radar at the moment. Henry, I'm trying to read his question. Do you return the entire base amount invested at the outset after note matures in 3 to 5 years or its window? Yes. Short answer is whatever the maturity date on your note is, could be 2, 3 years, 4 years, 5 years, 6 years, 7 years. That's the maturity date. That's when your principal's return and your interest payments stop, unless we still have the offering on the table and you want to reinvest, which I can't speak for 3 to 5 years from now, but it's pretty likely we'll still have this opportunity on the table over the course of the next 24 to maybe 36 months. But yeah, that's when your principal's return is, at the maturity date of the note. I'm trying to read as many as I can, as fast as I can here, for the time left.
Yeah, Mike, I'll read one as well here, Marco. Mike,
Yeah,
just get with your investment counselor on your question about, I know we see that you're self-directing and you're moving your money from your 401k, and you asked about the 2% bonus. If you get with your investment counselor, we'll get that question answered for you on honoring that 2%, because we know it takes some time to roll over those funds.
I think it's Louis here, L-O-I-S, Louis. Are there any current known investors that a prospective investor could speak with? Yeah, just talk to your investment counselor, whether it's Nate, Michael, John, and just let us know. And we'll certainly put you in touch with some people. Wilson, what type of investor is this available to? By definition, accredited investors. But again, talk to your investment counselor. There are a few exceptions to that. But Wilson, and talk to your investment counselor. Can the promissory note be under a trust name? Yes, it could be any entity. It could be you personally, your spouse, an LLC, a business, a self-directed retirement account like an IRA, 401k, a Roth account. If you've got funds sitting in an LLC, it's just wherever the funds come from, that becomes the note holder. That's the lender. That's the note holder. And so the payments would go back to that account. The distributions would be in the name of that entity. So that's done all the time, not an issue. Raj, can the offshore trust invest here through the U.S. entity, which is owned by the offshore trust? Short answer is yes, as long as there's a US bank account, because when we set you up on Wells Fargo Direct Pay, we have to put in the bank account information, the bank and the bank account information for it to be verified. As long as it's a US bank account of any kind, then it'll work. So it doesn't matter where the trust is located. We really don't care about that. It's really just where the bank account is located. How often, another Louis spelled differently, how often do you offer the bonus? Once a year, question mark. This is actually the first time we're doing this. So this is a one-off at the moment. You can call it an interesting experiment, if you will. But just because summer is slow, like July, August is slow, we decided to do a 2% bonus to see how it goes. And so the interest has been pretty good so far. But I wouldn't say it's once a year, maybe never again. So we'll see. We'll just see how it goes. Let's see.
Bamir, your question on interest rate, right? He said he read there's a max interest rate of 16.7%. Does that apply to the bonus promo? So 17% plus 5% equals 22. So let me break that down for you. You do 100K plus investment. Yes, it would be a 15% bump, 2%. So you get a 17% interest rate for the term of your loan. The 5% bonus is paid at the end of your term, right? So if let's for a 3-year note, for example, 3 years divided by 5%, whatever that breaks out to, and my brain's a little bit mush right now, but that 5% is at the end of your term. It doesn't compound every year, right? We don't pay you an extra 5% every year.
Kevin asked a question I think is good for everybody. I never received your information, documents, etc., to get this loan process started. So Kevin, there's an investor deck, if you will, kind of a PDF document that is kind of a presentation within itself. If that's what you're referring to, just email any one of us, whoever your investment counselor is, we'll resend that. But if you're referring to the documents as in the promissory note, it comes in the form of a DocuSign. So the promissory note will come to you for review and for a digital signature from DocuSign. If that's what you're referring to that you didn't get to start the investment process, again, just let any one of us know, any one of our team members. But if you're referring to the link, it's noradacapital.com/profile. That's not on our website. I'm just blurting it out here on the webinar. But again, your investment counselor would send you that link as well, which is noradacapital.com/profile. So that's where you can just fill out the form, take you 1 minute, and then you'll get the DocuSign right away. It'll automatically send it to you. Frank, do you offer a referral program if you find additional investors? I wish I could say yes, but the problem is that we are not allowed to pay referral fees per the SEC. It's a Regulation D filing, it's a 506C filing, and we can't pay referral fees per the rules and regulations of the SEC. It's not that we don't want to, we just can't. But if you want to work something out with someone you're referring, that's great. That's between you and them. You can figure out what you want to do, how you want to do it. It's just we have our hands tied and we can't do that for you, unfortunately. So I'm sorry, but that's not my rule. Wish I could help, but any referrals are greatly appreciated, and we're going to treat them just the same as we treat you. Is this session recorded? How to get it? Yeah, we'll send out a link here.
Yes, it is recorded.
Yeah, in the next day or so. Suli, would the 2% be available through beginning of September? Need time to liquidate? Get in touch with your investment counselor, get the profile form filled out, and get your promissory note signed. And then what we could do is we can work with you to lock that in, so that way we know your funds are coming. It's just if they're not coming by the end of August, then we'll just work with you for early September. So yeah, we'll work with you on that. Not a problem. So yeah, just talk to your investment counselor. And
Marco, just FYI, we are pushing the 2 o'clock plus mark here. How long do you want to have an extra couple minutes here? What would you like to tell our audience?
I'm guessing that let's do a little bit more. Let's just do a little bit more. I think people, there's a lot of people hanging on. I mean, we've got over 140 still on, and we're recording this. And then we could also schedule another one of these here real soon. So if it's worth doing that. But it sounds like we've got a lot of people who just want to stay on, which is great.
Yeah.
Khaled, do increased interest rates impact your business model? No, we're doing this it's a it's such a small percentage of what we're doing with what we're doing right now with this 2% bonus that no, it doesn't have an impact. Thomas, what are the other investments that you have in your portfolio? There aren't any others. There's 5 categories. 3 of them make up the bulk. E-commerce based ventures is one section. It's about 33%. 55, a good 55% are the mastermind businesses, which are the Money's Mastermind, Think Realty Mastermind, Power Room, which is a traditional 5-star mastermind. Those are really that's the beast that makes up the biggest portion of our portfolio. The third category are 9 Broadway musicals. The biggest one right now, which is running, it opened up in December 4th or December 5th, is called A Beautiful Noise. It's the Neil Diamond musical. So if you're in the New York area or you're traveling to New York, go check it out. It's an incredible production, doing very well. But we've got others, in that category, such as The Devil Wears Prada. We've got Broadway Vacation. We've got Joy. We've got Harmony with Barry Manilow coming out later this year. I mean, we've got a lot of great, exciting stuff. And we just feel that they're going to do very, very well. Maybe not quite as big as Hamilton, where, they're just printing money hand over fist. Every once in a while you get something like that. But we have high expectations. So those are the 3 main categories. The other 2 categories, like I said, one is just a very small percentage, less than 5% real estate based, about 5% real estate based, and then less than 5% is crypto. So if you do the math, you can see that 90% of it were those first 3 categories. So we're not looking at anything else at the moment, any other investments or investment categories. We're just looking to grow and scale what we have right now. We have a great position and a great portfolio. We just want to focus on that. Thanks, Thomas. Can I invest using the self-directed IRA? Yes, any self-directed retirement account, IRAs, 401ks, Roth accounts, anything that's self-directed, that's the operative word, self-directed, you can use to make an investment. Again, you need to qualify yourself, but yes, that can be done. Yeah, we're sending out the link, Scott, no problem. Fred, good question. Must a commitment be funded in all quotes or in all caps by month's end? Short answer, yes. Long answer is if you have your promissory note signed and we know that you are initiating funds transfers because you're doing something like a rollover, a funds transfer, whatever it may be, we'll work with you on that. That's not a problem. We would like to get this wrapped up by the end of the month, but it's not a big deal. If you're in a pinch and you are moving money, which my partner Andrew talks about all the time, money movement. By the way, go to an Aspire event. You'll hear a lot about money movement. That's what we talk about a lot in our Money is Mastermind. It's a central theme called money movement. But yeah, we'll work with you on that. That's not a problem. For Manning, for clarity, 12% of 50,000 minimum is paid monthly. Yes, all distributions are paid monthly at the beginning of the month. So all interest payments go out. Direct deposit, which is ACH, to your bank account, whatever the bank account is. If you're working with a trust company like Equity Trust or somebody with a self-directed retirement account, then it'll go to that account. Obviously, you can't touch the funds. You'll break the rules for your self-directed retirement account, and you'll be you could potentially be liable for taxes on it. We don't want that to happen to you. So the funds will be sent to your custodian, your trustee, be it Equity Trust, whoever it is. Nate, did you capture Kevin's information there?
I did. Yeah.
Okay, Kevin, we got that. Thank you. Okay, let's do 2 more questions. Jorge. Okay, thank you, Jorge. I'm just going to say this for everybody. Happy investor here since January 2023. Appreciate that.
Thank you, Jorge.
Yeah, thank you. That's great. I appreciate that. Man, I don't know. There's so many questions. There's no fees. Raj, good question. Any fees attached to these notes? No, it's a 0 fee fund. It's not like a 2 and 20 fund or anything like that. There are no fees. Nothing comes off the top or the bottom or the middle or the end. 100% of your principal goes to work. So you're earning interest on 100% of that working capital that you invest. So there's nothing that is taken off. There's no fees. It's not it's not a fee fund. We arbitrage the capital, so our profit comes off the back end in terms of cash flows, in terms of equity growth. The equity growth is the substantial part, obviously, but no, there's no fee. And Wilson, yeah, the 2% is paid on a 9-month note as well, if that's your only option. So, okay, let's see.
Tom, you had a good question. One more question here. When your note matures, say after 3 years, if you'd like to renew, we don't yet, certainly, yes, you can renew if the offering still stands, right? That's why some people do longer term notes. Some people do 5, 7 years, because if we do close down the offering at 2 years from now, you're still committed to paying you that remainder of that time. So if it's still available and you want to renew it after 3 years, yes. What would the interest rate be? We wouldn't know. We have to look at the offering at that time. So
yeah. Okay, well, I want to respect everyone's time. Like I literally could go on for hours. Marco saying, can the interest be paid in gold? No, is the short answer and the long answer. But anyway, to respect everyone's time, it's 2:10. We went for an hour and 10 minutes. I want to thank everybody for taking the time to jump on. This is recorded. We will send the link out. You will get it. We may end up just doing another one of these here, just short notice for everybody else if they want to jump back on, and we'll just continue taking questions. But if you still have questions that haven't been answered, you want to get an answer to them, please contact my team, contact Nate or Kathy or Liz, or just fill out the form on our website, and then we'll just connect you with an available investment counselor. It could even be myself, depending on how full everyone's schedules are. I have limited time on my calendar, but I will definitely take as many, calls with you as I can.
yeah.
Nate, anything else to wrap it up?
No, I think it's great. We appreciate you guys attending. And again, easiest way to contact us is to go to nirvanacapital.com. You can fill out your inquiry there, and that will get sent directly to our team. So we'll meet you from there.
All right, everybody. Thank you ever so much. I appreciate